Hi students, welcome to my new video. In this video, we will learn about some important accounting terms for beginners. Those who are starting accountancy for the first time, they need to be familiar with these common words. I will explain these words one by one in a chronological manner. So you guys need to note it down or just save the video for later use whenever you guys need to have a recap. These terms are the basic terms which are very necessary. So these are the basic terms that we are going to learn about in today's video. So the first term which we are going to talk about is an asset. Asset are the properties. Asset when translated to Hindi becomes sampatti. Everyone must be familiar with the concept of holding sampatti or their wealth. The way we have our wealth, like wealth of a family, वैसे ही business का there is an asset of business as well. Business holds a premise or a building, furniture, cash balance, bank balance, all the possessions of the company which they can use to generate cash at any time are what we call the assets of a company. So, in a simple term, all the possessions of a company are what we call the assets. After asset comes the liability, and you guys must have related it only that asset and liabilities are the opposite terms. Asset was the possession. Liability is the amount of money which we need to pay off, or the money we owe from others, right? The money which we need to pay to others is what we call liabilities. Any dues, any loans, any money that we have taken from market that we need to give on or repay is a liability. Now here is an important fact that capital, the money with which we start our business, is also a liability because company and the owner are two separate legal entities. They are not one individual. Company is totally different from the owner. Company has a legal existence. So the amount of money that an investor invests in a company is the capital which the company needs to repay back to the owner, and hence the capital for a firm is also a liability in the books of accounts of a firm or a company. I hope these two terms are clear. Moving ahead, debtors. Now this is a common doing in a business that all the transactions are not done in cash, right? There are credit transaction. Credit, that means in which we make the transaction or we make the purchase and sale, and then the amount is scheduled to be paid at a later date or scheduled to be received at a later date. Now when we do this, a person who we are selling goods on credit, they become our debtors. Okay, anyone who we are selling goods on credit and whoever needs to pay us later are what are debtors. Okay, so basically debtor is an asset for the company because we have sold them the goods and they need to pay us money. And similarly, creditors are those people from whom we have purchased money on credit and we need to pay them at a later date which has been predetermined, or a later date in future which is anonymous. Okay, coming to bills receivable. Before I explain bills receivable, I am going to explain you guys a term, bills of exchange. Now, suppose I make a sale transaction or I am making a purchase transaction. Now, there is a normal course that all the transactions are not made in cash. Some cash need to be paid at a later date. But what if the supplier or the company is unsure that whether it will receive the payment or not? In this case, we give them a bill of exchange. A bill of exchange is a written negotiable instrument. By negotiable, I mean transferable. That means it can be transferred from one person to another. So bills of exchange is a negotiable instrument which is made between the buyer and the seller, in which the buyer agrees to pay a certain amount of money at a predetermined date. Okay, so whoever is to receive the money is or whoever will receive the money, they write it in their bills receivable, and whoever needs to pay it will credit it to their bills payable account. So bills receivable are the bill of exchange that we are yet to receive, and bills payable are the bills of exchange that we are going to pay in future. Are basically the material or the product that a company has for sale or for use. Now the stocks generally are counted at 2 points in time: opening stock, closing stock. Basically, closing stock of 1 year is considered the opening stock of the other year, right? Basically they need to be same. So this is what stock is. Coming to revenue. Revenue is a simple term which we have all studied. Nothing but the income of a company or a firm by selling its good. Whereas expenditure is the amount of money the company is spending, right? The amount which a company or a firm is spending, what comes under the head expenditure. So these are the two correlated terms. Now talking about outstanding expenditure, expenditure which we have incurred but are yet to be paid. That means वो expenditure that we have incurred. That means I have taken the service. Suppose I am employing a labor. Now I have taken the service of the labor for the entire month, but I am yet to pay his wage. Now that is what will be considered as outstanding expense at the end of the year. Whereas accrued income is the income which I have earned but yet to be received. Suppose I have earned an interest, or I have earned a commission, or I have earned anything, but I am yet to receive it in monetary terms, then we call it accrued income. I hope the terms are clear to you. Now I am moving forward to the next set of terms. So moving ahead, the next term is bad debt. Now bad debt is that amount of money which we have, which we were not able to recover from our debtors. Debtors are the people who we sell on credit, right? So sometimes it may happen that we are not able to recover that amount from the debtors, and that amount is what we account for as bad debt. Now related to this, there is one more term which we call bad debt recovery. Of course, it might happen that we have considered it as bad debt, but it appears that we are recovering the amount at a later date. Now that is what we call bad debt recovery. Cash basis of accounting and accrual basis of accounting are very two important terms to be understood in order to understand basically the recording of a transaction. Cash basis of accounting is an accounting in which we consider an income only when we are receiving the payment, or we are considering an expenditure to be made only when we are actually paying the money. Now there is no concept of being paid or being received at a later date. So basically in cash basis of accounting, a transaction is only recorded when cash payment or receipt is involved. Actually we are paying. So the banks follow cash basis of accounting where they record any transaction only when they receive the money or make the payment. Until and unless they have done the cash formalities, they do not record any transactions. Whereas in businesses, we use accrual basis of accounting, in which a transaction is recorded on the date of it happening, no matter when the payment is made or received, right? So if I am making a purchase transaction, I will record the day I have made the transaction, no matter when I pay them the money, or no matter when I receive my money. In case of a sale transaction, the transaction will be recorded on the date of the sale or the day when my stock will get dispatched. Okay. Last is abnormal loss. Now, in a normal course of business, it might happen that a robbery happens or a theft is there, or during transit some goods might get destroyed, right? So these are abnormal situations. They do not take place in normal course of business. They are not happening which are going to take place recurringly. That means they are not going to take place every now and then, right? They are happening which happen once in a while. So these are treated under the head abnormal loss. So whenever we incur any loss like theft, robbery, goods spoiled due to any reason which is beyond our control and which is not taken into normal course of business, then we treat them under the head abnormal loss. Hope you guys have liked the video and understood the terms that I was trying to explain. And if you guys like the video, please subscribe to my channel, share it with your friends, and help and support the channel. Thank you.